Welcome to XRP Pro Ledger. And if you looked at the charts today and felt confused about what you are seeing, I need you to stay right here. Because what is happening with XRP right now is one of the most technically and fundamentally loaded setups this asset has ever been in. And the surface level price action is telling you almost nothing about what is actually building underneath it. XRP touched $1.50 today, a level that acted as a short term high and then rejected hard, pulling back to consolidate right at the $1.43 to $1.44 zone, where it is sitting right now, down roughly 2.5 to 3.3% on the session. But here is the number that changes the entire interpretation of that price action. $2.5 billion in 24-hour trading volume is sitting behind this move. That is not a weak, low conviction rejection. That is an enormous amount of institutional and market activity compressing into a very tight price range. And when you layer on top of that the Solana WXRP launch, the Kyobo Life Insurance partnership, the Goldman Sachs ETF disclosure, and the Clarity Act approaching a critical May deadline, you are not looking at a failed breakout. You are looking at a coiled spring. Let me give you the framework you need to read this price action correctly, because the $1.43 to $1.44 level is not just a random number on the chart. It is one of the most significant and heavily contested resistance zones in XRP's recent trading history. And the fact that XRP is consolidating right on top of it, rather than falling away from it, tells you something very important about the underlying demand structure. Every single time XRP has pushed toward this level over the past several weeks, a wave of selling has hit the market and pushed it back. That pattern has repeated enough times that the market has essentially drawn a line in the sand at this zone. But here is what most people analyzing this level are missing. The volume that is showing up at this resistance is not the volume of a market that is running out of buyers. It is the volume of a market where serious capital is accumulating at exactly the level where the sellers have been strongest. And that dynamic only resolves one way: when the accumulation outweighs the distribution. Now let us talk about what actually happened at $1.50 today. Because the way you frame a rejection determines whether you make good decisions or bad ones in the hours and days that follow. XRP pushing to $1.50 and pulling back is not a signal that $1.50 is an impenetrable ceiling. It is a signal that the first attempt at that level ran into supply that had been waiting there, and that supply absorbed the buying pressure and pushed price back to the consolidation zone. That is completely normal and completely healthy price behavior during a technical breakout process. What you should be watching is not whether $1.50 held on the first touch. It almost never does. What you should be watching is the volume and the price level at which XRP is consolidating after that rejection. Sitting at $1.43 to $1.44 with $2.5 billion in volume, it's telling you that the buyers who drove price to $1.50 did not panic and exit. They pulled back to a level and held. That is accumulation, not distribution. The Solana WXRP development that went live this week is one of those infrastructure milestones that does not generate a single explosive green candle the day it launches, but fundamentally changes the demand landscape for an asset over the weeks and months that follow. Wrapped XRP is now officially available on the Solana blockchain through the combined infrastructure of Hex Trust and LayerZero. And what that means in practical terms is that XRP has just been given a direct pipeline into one of the most active and liquid decentralized finance ecosystems in the entire blockchain space. Every lending protocol, every liquidity pool, every decentralized exchange operating on Solana can now include XRP as a native asset. Every Solana native trader and DeFi participant who previously had no reason to interact with XRP now has direct, frictionless access to it. That is a structural expansion of XRP's addressable market that did not exist before this week, and it is happening right at the moment when the price is consolidating at a key technical level with massive volume support. The Kyobo Life Insurance partnership deserves a level of analysis that most of the market is simply not giving it right now. Because on the surface, it sounds like another corporate announcement in a long line of corporate announcements. But when you understand what Kyobo Life actually represents in the South Korean financial ecosystem and what this specific deployment involves, the significance becomes much clearer. Kyobo Life Insurance is not a small regional insurer dabbling in blockchain as a marketing exercise. It is one of the foundational pillars of South Korea's institutional financial infrastructure, managing enormous pools of long-term insurance capital under strict regulatory oversight. The fact that Kyobo chose to pilot tokenized government bond settlements using Ripple custody means that sovereign debt instruments, government bonds, one of the most conservative and systemically important asset classes in global finance, are now being processed through XRP Ledger infrastructure. That is the kind of institutional validation that takes years to earn and cannot be manufactured through hype or marketing. Think about the signal that the Kyobo Life deployment sends to every other financial institution in Asia that has been watching the blockchain space and waiting for proof that this technology can handle real, regulated, systemically important financial instruments. South Korean regulators allowed this pilot. Kyobo's compliance team approved it. The legal framework was navigated. The technical infrastructure was validated. Every institution that was on the fence about whether blockchain settlement technology was ready for serious financial applications just got a very concrete data point from one of their peer institutions in one of Asia's most rigorous regulatory environments. And the ledger that passed that test was the XRP ledger. Not Ethereum, not a private consortium chain. The same XRP ledger that the market is currently pricing at $1.43, with $88 billion in market cap, holding the number 4 spot globally. The gap between what this infrastructure is being used for and what the market is currently pricing it at is where the opportunity lives. Now let us bring Goldman Sachs into the picture, because the institutional layer of this story is not just about Asian insurance companies and DeFi bridges. It extends directly into the heart of Wall Street in a way that has never happened before for XRP. Goldman Sachs disclosing a significant position in spot XRP ETFs is the kind of development that changes the internal conversation at every major asset management firm, pension fund, and family office in America. Goldman is not a firm that makes speculative bets on unproven assets. Goldman's ETF disclosure is the result of a process: internal research, risk assessment, compliance approval, strategic alignment. And the conclusion of that process was that XRP belongs in a Goldman Sachs managed portfolio. When the most prestigious investment bank in the world reaches that conclusion and puts it in a public filing, the institutions that have been sitting on the sidelines evaluating XRP now have cover to move. Goldman just became the permission structure that unlocks the next wave of institutional inflows. The Clarity Act, approaching a critical May deadline in the US Senate, is the legislative piece that ties every other development in this video together into a single coherent thesis. Right now, every institutional deployment happening around XRP, the Kyobo Life pilot, the Goldman ETF position, the Coinbase market maker filing, the WXRP Solana bridge, is happening in a regulatory environment that still has some degree of uncertainty hanging over it. The Clarity Act resolving before May would remove that final layer of uncertainty and provide the comprehensive legal framework that allows the largest and most conservative pools of institutional capital to make full, unrestricted allocations to XRP-related products and infrastructure. We are not talking about the forward-looking institutions that are already moving. They are already positioned. We are talking about the pension funds, the sovereign wealth funds, and the endowments that require legislative clarity before they can move at all. That capital is waiting for a green light, and the green light has a May timeline. So, let us put the complete picture together and understand what XRP's current price action is actually telling you when you have all of this context in place. XRP is trading at $1.43, consolidating at a major resistance zone after touching $1.50, with $2.5 billion in daily volume holding it in place. WXRP just went live on Solana through Hex Trust and LayerZero, opening a direct pipeline into a multi-billion-dollar DeFi ecosystem. Kyobo Life Insurance just validated XRPL as the infrastructure for sovereign bond settlement in one of Asia's most rigorous regulatory environments. Goldman Sachs just disclosed a significant position in spot XRP ETFs, providing institutional cover for the next wave of allocators. And the Clarity Act is moving toward a May deadline that could unlock the largest pools of capital that have not yet moved. The question the competitor asks is right, even if their framing was wrong. What breaks first, the wall at $1.44 or the patience of the people waiting behind it? With this much institutional infrastructure being deployed simultaneously, the answer is becoming clearer by the hour. Here is what the data is actually saying when you step back and read the full picture without emotion and without the noise of short-term price fluctuations. The $1.50 rejection today was not a ceiling being confirmed. It was a first test of a level that will be tested again with more firepower behind it the second time. The $1.43 consolidation with $2.5 billion in volume is not weakness. It is a loading zone where serious capital is finding its footing before the next leg. The institutional infrastructure being deployed around XRP right now on Solana, in South Korea, at Goldman Sachs, and in the US Senate does not show up in the price the day it is announced. It shows up in the price when the market finally connects all the dots and realizes that the asset sitting at 1.43 is being woven into the fabric of global financial infrastructure in real time. That repricing, when it comes, does not move in the increments the market is used to seeing. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.